I'm John Howard, and the topic of today's short video is Netflix stock 100x since 2012 versus real estate. So, what does that mean? Well, what that means is I actually was investing in stocks back in 2012, or actually before 2012. I first took a position in Netflix back in 2011, but it did actually go down quite a bit until 2012. And What I'm talking about is Netflix is actually my only 100x ROI. Even saying 100x is kind of high. I don't think many investors actually experience 100x, except for unless you're like a VC. I mean, it's fine. Some regular stock market investors do experience that, but it's not that common. But to this day, Netflix is my only 100x ROI stock investment, and I'm kind of stacking the two against each other. Netflix versus real estate from 2012 until now. Okay, so there is no question that it would have been the smartest decision to never sell any of my Netflix stock, which I started buying in 2011. And then what happened in 2012 was something happened with my conviction on it, and for a few reasons. I mean, number one, I was looking at their financials. I kind of came up with a little process where I looked at their gross profits and then divided them into the market cap, right? So at the time, back then in 2012, my recollection was it was about three. So if you took a look at what Netflix market cap was at that time, I divided the gross profits into it, and it was about three, and it was very low. That was a very low multiple relative to others on the list that I was looking at. And I had strong conviction, so I went in about 25% of my holdings, which at the time was only $25,000. Well, I mean, that's not insignificant, but I went in $25,000 at that time in 2012. And again, it dropped from, it was actually, the stock price was higher in 2011. So at the time that I took that position at 25,000, the Netflix stock was pretty low. So, and this was actually in circa around October 2012. And at that time, if you were to actually look at it, that's around, the price was about $10, maybe like a little bit less than $10, between $9 and $10, which we'll just say $10 for the sake of ease in today's stock trading price for Netflix. So, but here's the reality. The reality is that I'm not perfect, and never selling any of your liquid stock prior to being financially independent or a liquid millionaire is not exactly possible, as life can be expensive and is expensive, and I'm also a parent. The good news is that I've been able to hang on to at least some of the Netflix stock I originally purchased and I acquired over many years since 2012. But it's not really that much stock, so it's not necessarily a Cinderella story. I can confidently say that I never sold any of the Netflix stock to pay any rental property expenses. I did, though, sell some of my Netflix stock when I did a spec build. I spec built a house, a beach house in Los Angeles, which was circa 2015 to 2017. So if you look at the numbers, 25,000 into Netflix in October 2012, and never added to or sold would be worth approximately $2.5 million, $2,500,000 today. Actually, it's a little bit more. So if you look at 25,000 into Netflix back in October 2012, let's just say the stock price was 10. So that's basically, so that those 2,500 shares would be worth 3 million today. So it actually is more than 100x. I was just doing 100x because it's easy for this, for this video, but it is actually 3 million. So it's more than 100x in today's, according to today's stock price, because their stock price is actually now over 1,200. Here it is May of 2025. So while I have nowhere near $3 million worth of Netflix stock today, it's more like 8 to 10,000 worth of it. I have been able to hold on to my real estate portfolio, and it's quietly risen to a $3 million portfolio value. Of course, there are mortgages involved, so my equity is not 100% of its value. My equity is actually below 3 million, somewhere in between the 1 million and the $2 million mark. So what's the better route? Well, obviously, it would have been better to not sell any Netflix and be sitting on $3 million worth of Netflix stock, right? But it seems fair to say that the best route would be to do both. But as I mentioned in the beginning, prior to being financially independent or a liquid millionaire, it could be difficult, if not impossible, to do both. If you look at the year 2012 to 2025, when I've owned Netflix stock, there were many ups and downs. And unfortunately, I carried margin specifically during 2022 when Netflix stock went from 600 down to 200. 2022 marked a year of doing a lot of required selling in my portfolios due to carrying margin. And as I said before that, I also uh, did sell some Netflix to actually, start the down payment and do a real estate project where I did spec built a house, a beach house in Los Angeles, circa 2015 to 2017. With real estate as a long-term investment property, earning money through rentals, not the spec build, I never had to gamble on this investment, and it's proved to be a primary source for retirement, average monthly income, and the vehicle for building generational wealth, aka my family's future. During 2012 to 2025, on my rentals, I hustled a lot, but I had the choice and the control to pay my bills with rental income alongside of other, business income, and build wealth by paying the mortgage down, appreciation, and tax savings from depreciation and active income offset. This doesn't even include the reality of being able to borrow against the property to acquire more investment property, which is what I'm working on now. So, if an investor can earn a decent cash on cash return through real estate investment property, it seems fair to point out that the investor has more control than any other investment because the investor can calculate profitability before buying. With the introduction of short-term rentals and even medium-term rentals, the investor can find a profitable location, which is, let's say, 2 to 5 hour drive from a major metro area. The investor can analyze the entire market with modern tools like AirDNA to see what other properties perform well. The investor can introduce amenities for short or medium-term rental. What I do is like a hybrid where I do short-term rentals some of the year and then a medium-term the other part of the year, which enables them to charge a premium nightly rate. The investor can also strategically renovate the property to gain equity through what's called forced appreciation. The investor can design the property strategically and hire professional photographers to captivate attention at first glance. The modern day real estate investor uses a lot of data to strategically invest. Clearly, stock market investors also use a ton of data to invest as well. Even I was using, my own formula where, as I mentioned before, I looked at the market capitalization, and then I divided the gross profits into that. And this is what, partially sparked some of my enthusiasm and interest. Well, I already owned some Netflix stock, but it sparked my enthusiasm to go higher and take what was a 25% exposure to Netflix at that time during 2012. But an investor doesn't have as much control when it comes to stocks in the public markets, other than, of course, just buying and selling it, right? It's also very difficult to pick good stocks. Even Warren Buffett is famously known for only 12 investments making his career. And this is out of hundreds, if not thousands, of investments he made over nearly 100 years. It's widely known that Warren Buffett has a less than 4% hit rate. I call real estate the wealth building strategy quinfecta: rental income and cash flow, mortgage paydown, long-term appreciation, tax savings through depreciation and active income offset, and the ability to borrow against the property to acquire more investment property. It's one investment, but the investor gets multiple benefits. So there you go. What do you think? I mean, I think it's obvious. I would rather, have $3 million of Netflix, but, as I mentioned, it's not really possible. I mean, I did the best that I could, during the times where I was forced to sell through margin calls and such. And a lot of times with liquid investments like the stock market, you just have to pay your bills, and it just is what it is. Sometimes you need the money, and it's right there, so it can be certainly difficult to to not sell it when you have to, or not use it when you have to. Whereas with real estate, it's a lot more difficult to actually get that money. You can still get it. I've gotten seconds on my property. In fact, I actually had to get a second when I was finishing the beach house that I spec built. I had to, it was a very, very short period of time, but I had to get a second to actually finish the property so that we could sell it, right? Okay, thank you, everybody. Let me know what you think. Do you like this story about Netflix? I think that I would love to invest in more Netflix like that, and that's obviously one of the biggest investor mistakes I made. But again, I'm a parent, and life isn't perfect, and sometimes you need the money, right? I also talk about As you can see, I talk about generating consistent 4 and 5 figure deposits and achieving a $1 million net worth through owning short and medium term furnished rentals. Turn a tax liability into a scalable investment through owning these rentals. Everybody, if you like this content and you like this video, consider giving it a like, and then also you can consider subscribing to the channel. If you like this content, or if you know somebody that might be interested in doing rentals in real estate, you can forward them this video. There's also links in the description area. I have something called the SMTR Launch Kit. Super, very inexpensive launch kit that I have. It's like a digital product. And then I also do email coaching. Again, if this is for you, you can access those links. Or if it's somebody that you know that actually might be interested in that, they could work with somebody, or at least get some knowledge from an expert that's maybe a little bit further ahead of them. Okay, thank you very much and have a good one.